Welcome to FT Markets. Well, really, this week there's only been one stock to follow, Glencore. Shares in the miner-cum trader plunged by over a third on Monday before picking up later in the week. They're now back to where they were. Here to discuss what's been going on with this company is Marc Elliott, the mining analyst from Investec. Marc.
Morning.
We saw this big fall on Monday, 30%. You played a part in that with a report that you put out claiming that the company's equity could potentially be worthless. Could you just run us through the thinking behind that argument and sort of explain how you arrived at that conclusion? And I mean, does that explain this sort of poor performance we've seen ever since the company was floated, and indeed actually over the past year and a half?
Certainly. When we were suggesting the company might be worthless, I think that's taking perhaps out of context entirely what we were saying. What we did, and it was a note that we did as a team, examining all four mining companies.
So Anglo-American, Glencore,
BHP, and we were comparing them all and how exposed they might be in effect if this spot commodity price environment were to continue for some time.
And when you mean spot, you mean current prices. So if we have current prices continue.
Exactly. If there's no change in the pricing environment, what would that do to earnings? And we took a relatively simplistic approach, but these are very complicated companies, a lot of moving parts. As we see, the commodity prices move quite considerably.
So we can probably bring that up. Yeah, we can see things like copper and
exactly.
and thermal coal. There we are, and nickel. Some of the things Glencore mines, and others.
Precisely. So trying to keep it simple, we felt was a good way to compare the companies. So we used a 15 times multiple on earnings because we felt that was reflective of sort of long-term multiples for these sorts of companies, and multiplied that by the forecast earnings at spot prices. And inevitably, that's where we saw no earnings attributable to the shareholders for the business. And Anglo-American was also suffered similarly. BHP and Rio not quite to the same degree, but that certainly outlined that unless the business responds, which is certainly taking place currently, earnings to shareholders will be negligible.
Okay, and that matters in the example of Glencore because they have a lot of debt that goes back to the acquisition of Xstrata. But the problem is, therefore, they're not generating any earnings, and what they are generating is being used to pay down debt. So shareholders are not being rewarded with anything. Is that the argument?
That is a part of it, certainly. They have to service a lot of debt. Interest costs of the order of $1.5 to $1.8 billion if we look out going forward, subject to how they refinance their various facilities. For now, yes, they have ample liquidity to see through this cycle, and I think really what we're trying to focus on is saying if this down cycle worsens or is even protracted because they have to suffer this debt or carry this debt, they are heavily exposed. This is why the credit rating therefore becomes an issue. If they are downgraded, let's say a year, 18 months from now, and the business hasn't restructured as intended, then they could find themselves under more pressure. However, the company has outlined a $10.2 billion plan, which our analysis we've done recently would indicate they can achieve the targeted gearing if that is delivered to its entirety.
Okay, and you mentioned previously their commodity prices. I mean, do you think they've bottomed? Have we seen the worst of things, or is there further to go?
I think you have to be very selective on commodities now. You can't just put them all together and assume they trend similarly. The key commodities are typically iron ore, coal, and of course copper. Dr. Copper, the bellwether of economics. So have we reached the bottom? I think on a near-term basis, perhaps not. We at Investec are expecting the bottom to occur next year. So we'll see if that happens.
And what will bring on the trough then? Will it be supply cuts, or will it be? I mean, what will mark that sort of moment, do you think?
I think it'll be when the supply cuts are sufficient to balance with the fallback in demand. And I think what everyone has incorrectly forecast has been the fallback in demand from China, really. China is the biggest consumer of effectively almost every commodity there is out there. And its pullback over the course of this year has caught people by surprise. I believe Glencore themselves were saying that the visibility within China is very difficult today.
So that brings it back to Glencore again. So if they're saying they don't know what's going on in China and they're the biggest trader of many, many commodities in the world, it's very difficult for anyone to say what might happen in terms of Chinese demand for commodities going forward. So therefore, it's difficult to say whether this sector has bottomed or whether mining stocks indeed look good value at these levels.
I think that is entirely correct. I think it's very difficult today. What we might be seeing today with these latest developments is the sort of the next leg down evolving, and we have to keep a very close eye on how the months ahead proceed. I think in Glencore's case, it's very much going to be copper, what happens to copper in the months ahead. And then, of course, for BHP and Rio, it's keeping an eye on what's happening in iron ore with the vast new production coming on stream, and whether we take further steps down in pricing on that front.
Okay, Mark, thank you very much.
Thanks, Neil.
So, Ivan Glazenberg has moved to cut Glencore's debt, yet the fortunes of the company will weigh heavily on what happens in China and demand for commodities from that country.